Why are there not more people talking about whether AI can predict the next Bitcoin crash? Stay tuned as we reveal the secret answer. I bet you didn't know that Bitcoin's price has crashed over 80% multiple times in its history. Imagine a digital gold rush. Fortunes made overnight, dreams shattered in an instant. That's Bitcoin. A wild ride of soaring highs and crushing lows. It's a heart-stopping roller coaster for investors. One minute you're on top of the world. The next, you're staring into the abyss. Remember 2017? Bitcoin skyrocketed to almost $20,000. People were buying Lambos and quitting their jobs. It was a bloodbath. But the roller coaster didn't stop. Then, the crash. A brutal plunge that wiped out billions. It happened again and again. Each time the stakes got higher. The crash is more devastating. In 2018, fell from $20,000 to $3,200 amid market saturation and regulatory fears. This period was called the crypto winter. In 2020, the price plunged from $10,000 to $4,000 during the COVID-19 global economic crisis. But then Bitcoin really started rallying. People became rich again. It went $4,000 from early 2020 to roughly $64,000 in April 2021. But then in 2021, Bitcoin crashed from $64,000 to $30,000 after Tesla stopped accepting Bitcoin payments. And if you think that wasn't enough, in 2022, it dropped from $48,000 to $17,000 following the collapse of the Terra Luna stablecoin ecosystem. In 2023, it fell from $21,000 to $15,000 due to the bankruptcy of the FTX crypto exchange. In 2024, the price of BTC dropped from $40 to $25 because of SEC lawsuits against major crypto exchanges. The question is, can we predict these crashes, or are we doomed to repeat the cycle of boom and bust? I bet you didn't know AI is already being used to predict Bitcoin's price movements. Hedge funds and institutional investors are pouring millions into AI-powered trading algorithms. They're betting big on AI's ability to give them an edge. But there's a catch. AI is not a crystal ball. It has limitations, and the Bitcoin market is a beast like no other. So, can AI really predict the next Bitcoin crash? The answer might surprise you. Stay tuned to find out. I will never forget the moment Bitcoin skyrocketed from $13 to over $1,000 in 2013. Back in 2009, Bitcoin was just a geeky experiment. A digital curiosity that few people understood, let alone invested in. It bounced around for a few years, barely registering on the radar. Then, things started to get interesting. In 2013, Bitcoin had its first major breakout. It shot up from around $13 to over $1,000 in a matter of months. The world watched in amazement as this digital currency, once dismissed as a fad, started to gain real value. But this was just a taste of the roller coaster ride to come. The crash came quickly. By the end of 2013, Bitcoin had plummeted back down to around $300. It was a harsh lesson for early investors. Bitcoin was volatile, unpredictable, and it could wipe out your savings just as fast as it could make you rich. But the allure of quick profits was too strong to resist. The Bitcoin roller coaster was just getting started. I'm sure you've heard the news. Fast forward to 2017, Bitcoin was back with a vengeance. This time it wasn't just techies and early adopters who were paying attention. Everyone from Wall Street investors to your grandma was talking about Bitcoin. The price of Bitcoin skyrocketed, reaching an all-time high of almost $20,000 in December 2017. It was the ultimate get-rich-quick scheme. People were taking out loans, mortgaging their homes, and emptying their savings accounts to buy Bitcoin. But the party couldn't last forever. In January 2018, the bubble burst. Bitcoin crashed, losing over 80% of its value in a matter of months. It was a bloodbath. Countless investors were left holding the bag, their dreams of easy riches shattered. The 2017 crash was a stark reminder of Bitcoin's volatility. It showed the world that even when Bitcoin seems unstoppable, a crash can happen at any time. This is going to blow your mind. After the 2017 crash, Bitcoin entered a period of relative stability. The price fluctuated, yes, but it wasn't the wild ride it once was. Some investors lost faith, but others saw an opportunity. Then came 2020. The COVID-19 pandemic sent shockwaves through the global economy. Governments printed trillions of dollars in stimulus money, and Bitcoin, seen by some as a hedge against inflation, started to climb again. This time the surge was driven by institutional investors. Major companies like Tesla and Square added Bitcoin to their balance sheets. PayPal started accepting Bitcoin payments. It seemed like Bitcoin was finally going mainstream. The price soared to new all-time highs, surpassing $60,000 in early 2021. But just like in 2017, the party didn't last. By mid-2021, Bitcoin was crashing again, losing over 50% of its value. Are you worried about the next Bitcoin crash? Will it continue its volatile ride with massive booms and busts, or will it eventually stabilize, becoming a more predictable asset? The truth is, no one knows for sure. Bitcoin is a relatively new asset class, and its price is driven by a complex interplay of factors, including regulation, adoption, technology, and market sentiment. This is where AI comes in. Can AI, with its ability to analyze vast amounts of data and identify patterns, help us predict the next Bitcoin crash? Or is the future of Bitcoin simply too unpredictable, even for the most sophisticated algorithms? Am I the only one that didn't know how AI analyzes Bitcoin's every move? Imagine a supercomputer, its digital mind buzzing with activity. This isn't some sci-fi movie. This is the reality of AI analyzing Bitcoin. But how does it work? What kind of information does this digital brain crave? First, it's all about the data, and Bitcoin is a data goldmine. Every trade, every price fluctuation, every single digital breadcrumb left behind. AI gobbles it all up, storing it away in its vast memory banks. Think of it like a detective at a crime scene. Every click, every transfer, every whisper on social media is a clue. AI pieces together these digital fingerprints, building a comprehensive picture of Bitcoin's behavior. But it's not just about the numbers. AI dives deeper, analyzing news articles, social media trends, even forum posts. It's like reading the collective mind of the Bitcoin community, trying to decipher the emotions, the fears, and the hopes that drive the market. This relentless data collection is the foundation of AI's predictive power. By understanding the past, AI aims to anticipate the future, just like a seasoned detective predicting a criminal's next move. You need to hear this if you're a trader. Now, let's talk charts. Those squiggly lines that make your eyes cross. Technical analysis is the bread and butter of traditional traders, but AI takes it to a whole new level. Imagine an army of analysts, working around the clock, scrutinizing every single price movement. That's what AI does, but faster, more efficiently, and without the need for sleep or coffee breaks. AI identifies patterns, trends, and anomalies that would make even the most seasoned trader's head spin. It spots those telltale signs, those subtle shifts in momentum that often precede a major market move. Remember those moving averages? Those support and resistance levels that traders obsess over? AI crunches them all, but it also goes beyond, uncovering hidden correlations and complex patterns invisible to the human eye. It's like having a superpowered magnifying glass, zooming in on the smallest details of Bitcoin's price history, searching for clues about its next move. I bet you didn't know AI can gauge the market's mood. Here's the thing about Bitcoin. It's driven by emotions. Fear and greed, hope and despair. And AI knows it. That's why it's become a master of sentiment analysis. Imagine scrolling through millions of tweets, blog posts, and forum comments in the blink of an eye. That's what AI does, analyzing the language, the tone, the underlying emotions behind every message. It's like taking the pulse of the Bitcoin community. AI can sense shifts in sentiment, identifying moments of extreme fear or euphoria that often precede major price swings. Think of it like this. When everyone is screaming buy at the top of their lungs, it's usually a sign that the market is about to crash. And when everyone is panicking, selling their Bitcoin for pennies on the dollar, it might be time to buy. AI understands these emotional waves. It uses sentiment analysis to anticipate market swings, identifying opportunities that human traders might miss in the heat of the moment. Are you curious about how AI can predict Bitcoin's future? This is going to blow your mind. So, AI gathers data, analyzes charts, and reads the mood of the market. But can it actually predict the future of Bitcoin? That's the million-dollar question, isn't it? AI algorithms, powered by machine learning, use all this information to build predictive models. These models are constantly learning, evolving, and adapting to the ever-changing dynamics of the Bitcoin market. It's like training a digital prophet, feeding it massive amounts of data and letting it loose to make predictions about the future. But even the most sophisticated AI can't predict the future with 100% certainty. The Bitcoin market is a complex beast, influenced by countless factors, some predictable, others completely random. Governments, regulations, technological advancements, even Elon Musk's tweets can send shockwaves through the market. AI can identify patterns, analyze trends, and anticipate market sentiment, but it can't account for the unknown. And in the world of Bitcoin, the unknown is always lurking around the corner. I bet you didn't know that AI might not fully understand the human element in trading. Here's the crux of the matter. AI is a powerful tool, but it's just that, a tool. It lacks the intuition, the gut feeling, the irrational exuberance that often drives human behavior in the markets. Think about it. Markets are driven by fear and greed, by hope and despair. These are emotions that AI can't fully comprehend, no matter how much data it processes. AI can analyze past market crashes, identify patterns, and assess risk factors, but it can't predict the next black swan event, the unforeseen circumstance that throws the market into chaos. Remember the COVID-19 pandemic? No one saw it coming, not even the most sophisticated AI. It was a stark reminder that even in the age of algorithms, human behavior remains the ultimate wildcard. So, can AI predict the next Bitcoin crash? It can certainly provide valuable insights, identify potential risks, and help us make more informed decisions. But in the end, the future of Bitcoin, like the future itself, remains shrouded in uncertainty. I'm sure you've heard the news. Section 1, the 2017 crash. Did AI see it coming? 2017. Bitcoin mania was sweeping the globe, prices were skyrocketing, everyone from your dentist to your dog walker was suddenly a crypto expert. But behind the scenes, a different breed of investor was watching, analyzing, and dare we say predicting? Remember that epic crash? The one that wiped out billions and left countless investors in tears? Well, some AI systems did, not with perfect accuracy mind you, but they saw the warning signs. They detected the signs of a classic bubble, the parabolic price increases, the FOMO-driven buying frenzy, the social media echo chamber. Some AI models even flagged specific dates, warning of an imminent correction. Now, were these predictions spot on? Not always. Some AI systems missed the mark entirely, while others underestimated the severity of the crash. But remember, this was still the early days of AI and finance. The technology was nascent, the data set smaller, the algorithms less sophisticated. Even with these limitations, the fact that some AI systems were able to anticipate, even partially, such a major market event was a watershed moment. It was a glimpse into the future of finance, a future where machines could potentially outperform even the savviest human traders. Are you amazed by AI's potential in the financial world? Section 2. Riding the wave. AI's bullish run in 2020. Fast forward to 2020. The world is in the grip of a global pandemic. Markets are crashing, uncertainty reigns, and Bitcoin? Well, Bitcoin starts to shine. This time, AI was ready. Armed with more data, better algorithms, and a deeper understanding of Bitcoin's behavior, AI-powered trading systems went on a tear. They rode the wave of institutional adoption, capitalizing on the growing interest from hedge funds, corporations, and even governments. They correctly predicted Bitcoin's resilience in the face of global economic turmoil. Some AI systems even managed to predict Bitcoin's breakout above its previous all-time high, a feat that left many human analysts scratching their heads. It seemed like AI was finally cracking the code of the crypto markets. Of course, not every AI system was perfect. There were still losses, miscalculations, and missed opportunities, but the overall performance was undeniable. AI was no longer just a novelty in the financial world, it was a force to be reckoned with. This is gonna blow your mind. AI stumbles but learns from its mistakes. 2021. The year Bitcoin went to the moon, touched the stars, and then decided to take a little tumble back to Earth. Remember that roller coaster ride? Yeah, AI remembers it too. This time, things were different. The market was more volatile, driven by a complex interplay of factors including regulatory uncertainty, environmental concerns, and of course the occasional cryptic tweet from a certain tech billionaire. Some AI systems, caught off guard by the speed and ferocity of the downturn, stumbled. They failed to anticipate the impact of China's crackdown on crypto mining, or the sudden shift in sentiment driven by Elon Musk's pronouncements. But here's the thing about AI, it learns, it adapts, it evolves. Every mistake, every miscalculation, every missed opportunity is a lesson learned. A chance to refine the algorithms, to improve the models, to get better at predicting the unpredictable. So, while AI may not have aced the 2021 dip, it emerged from the experience stronger, smarter, and even more capable of navigating the treacherous waters of the crypto markets. If you're a crypto enthusiast, then you need to know, can AI actually make you rich? Now, let's get down to brass tacks. The question on everyone's mind, can AI actually make you rich in the wild world of Bitcoin? The answer, as with most things in life, is complicated. AI can give you an edge, no doubt. It can help you identify patterns, anticipate market sentiment, and make more informed trading decisions. But here's the catch. AI is not a magic money printing machine. It's a tool, and like any tool, its effectiveness depends on the skill of the user. You need to understand how AI works, how to interpret its predictions, and how to manage your risk. You need to be aware of its limitations, its biases, and its susceptibility to black swan events. In other words, AI can be a powerful ally in your quest for crypto riches. But it's not a substitute for sound judgment, risk management, and a healthy dose of skepticism. I bet you didn't know why AI's track record is so hard to decipher. Here's the thing about the world of high finance, it's a secretive world. Hedge funds, institutional investors, and tech giants are pouring billions into AI-powered trading systems, but they're not exactly sharing their results with the public. Think of it like an algorithmic arms race. Everyone is trying to build the fastest, smartest, most profitable AI, but they're doing it behind closed doors. So, it's hard to get a truly accurate picture of AI's overall track record in predicting Bitcoin crashes. The successes are often whispered about in hushed tones at exclusive conferences, while the failures are swept under the rug, never to be spoken of again. This lack of transparency makes it difficult to assess the true potential and limitations of AI in the crypto markets. It's like trying to judge the outcome of a horse race by only looking at the winning horse without knowing anything about the rest of the field. So, while we can point to specific examples of AI's successes and failures, the bigger picture remains shrouded in mystery. And that, my friends, is what makes the world of AI and Bitcoin so fascinating, so unpredictable, and so potentially lucrative. This is why you need AI in the Bitcoin market. Let's face it, humans are emotional creatures. We buy high on excitement, sell low out of panic, we chase trends, follow the herd, and let our gut feelings guide our decisions. Not exactly a recipe for success in the volatile world of Bitcoin, is it? AI, on the other hand, doesn't have emotions. It doesn't get greedy when the market's soaring, doesn't panic when the price plummets. It simply analyzes the data, identifies patterns, and makes decisions based on cold, hard logic. Think of it like this. AI is like a poker player with a perfect poker face. It doesn't reveal its hand, doesn't get rattled by bluffs. It just plays the odds, making calculated decisions based on probability and statistics. And the best part? AI never stops learning. Every trade, every market fluctuation, every news article is a learning opportunity. It's constantly refining its algorithms, improving its predictions, and getting better at navigating the treacherous waters of the Bitcoin market. So, in a world driven by emotions, AI's unemotional approach might just be its biggest advantage. You need to hear this if you're a Bitcoin investor. AI thrives on patterns. It devours data like a starving man at a buffet, searching for those telltale signs, those recurring sequences that suggest a future outcome. And the Bitcoin market, for all its chaos, is not immune to patterns. Think of it like this. Imagine trying to predict the weather without ever having seen a weather pattern before. It would be impossible, right? Well, that's what traditional traders are doing, trying to make sense of the market without the benefit of AI's pattern recognition capabilities. AI can analyze decades of market data in the blink of an eye, identifying subtle correlations between price movements, trading volume, social media sentiment, and even macroeconomic indicators. It can spot those recurring sequences, those telltale signs that often precede a bull run or a market crash. But here's the catch: correlation does not equal causation. Just because a certain pattern has preceded a market crash in the past, doesn't mean it will always predict a crash in the future. The market is a complex beast, influenced by countless factors, some predictable, others completely random. So while AI's pattern recognition abilities are undoubtedly impressive, they are not foolproof. It's like trying to predict the future by reading tea leaves. You might get lucky sometimes, but don't bet your life savings on it. This is gonna blow your mind. Black swan events, unforeseen circumstances that throw everything into chaos and make a mockery of even the most sophisticated predictions. Remember the COVID-19 pandemic? No one saw that coming, not even the most powerful AI. AI is great at analyzing the past, identifying patterns, and making predictions based on historical data. But what happens when something completely unprecedented occurs? Something that throws all the historical data out the window? Think of it like this. Imagine training an AI to predict the outcome of chess matches. You feed it millions of games, teach it all the strategies, all the possible moves. The AI becomes a chess-playing prodigy, capable of beating even the grandmasters. But then, one day, someone introduces a new chess piece with completely new rules and capabilities. Suddenly, all the AI's training, all its knowledge of past games becomes useless. It's facing a situation it has never encountered before, a situation for which it has no frame of reference. That's the black swan problem in a nutshell. AI can handle the known unknowns, the predictable risks, the events that have happened before and are likely to happen again. But when it comes to the unknown unknowns, the truly unpredictable events, AI is just as clueless as the rest of us. Why are there not more people talking about whether we can fully trust machines with our money? Let's be honest, trusting machines with our money feels a little unnerving. It goes against our instincts, our deep-seated belief that humans, with all our flaws and emotions, are still the masters of our own destiny. We like to think we have control, that we understand the rules of the game. But the truth is, the financial markets are a complex, chaotic system, driven by a myriad of factors, some rational, others completely irrational. And in such a system, can we ever truly trust machines to make the right decisions? AI can analyze data, identify patterns, and make predictions with a speed and accuracy that far surpasses human capabilities. But it lacks the intuition, the gut feeling, the understanding of human psychology that often plays a crucial role in financial decision-making. Think about it. Markets are driven by fear and greed, by hope and despair. These are emotions that AI can't fully comprehend no matter how much data it processes. It can't anticipate the next market panic, the next irrational exuberance, the next black swan event that sends shockwaves through the financial system. So, while AI can be a powerful tool, it's important to remember that it's just that, a tool. It's not a replacement for human judgment, for experience, for that gut feeling that tells you when something is too good to be true or when it's time to cut your losses and run. Are you afraid to trust AI with your hard-earned Bitcoin? The answer, as with most things in life, is not a simple yes or no. It depends on your risk tolerance, your investment goals, and your understanding of both AI and the crypto market. If you're looking for a get-rich-quick scheme, a magic money-printing machine that will make you a Bitcoin millionaire overnight, then AI is not for you. Neither is Bitcoin, for that matter. But if you're willing to put in the work, to learn about AI, to understand its strengths and limitations, then it can be a valuable tool in your investment arsenal. It can help you make more informed decisions, manage your risk more effectively, and potentially increase your chances of success in the volatile world of Bitcoin. Just remember, AI is not a crystal ball. It can't predict the future with 100% certainty. but it can give you an edge, a leg up in a market where every advantage counts. The key is to use AI wisely to combine its analytical power with your own judgment and intuition. And never, ever forget that in the world of Bitcoin, anything is possible. I'm sure you've heard the news. AI's not coming, it's already here. Let's be clear, Wall Street isn't some sleepy dinosaur stuck in its old ways. They're not ignoring the AI revolution, they're leading it. While we're debating whether to trust a robot with our grocery list, they're building armies of algorithms to conquer the financial markets. Think about it. These guys have the resources, the data, the raw brainpower to build AI systems that would make our heads spin. They're not messing around with some free trading app, they're playing a whole different game. And guess what? They're not sharing their secrets. Those hedge fund managers aren't exactly known for their open-door policy. So, while we're getting excited about the latest AI-powered trading bot, they're already 10 steps ahead using AI to gain an edge we can barely comprehend. This isn't some dystopian sci-fi movie where robots take over the world. It's happening right now in the real world and the stakes are higher than ever. I bet you didn't know how powerful human-AI collaboration can be in the world of finance. So, are we doomed to be left in the dust, watching helplessly, as AI runs off with all the Bitcoin? Not necessarily. Remember, AI is a tool, and like any tool, it can be used for good or evil. The real question is, how can we harness the power of AI while still maintaining our own agency, our own understanding of the risks and rewards? It's about finding that sweet spot, that balance between human intuition and machine intelligence. Imagine a world where AI helps us make smarter investment decisions, where it flags potential risks, where it provides us with data-driven insights we could never uncover on our own. But imagine that we, the humans, are still the ones calling the shots, the ones setting the goals, the ones ultimately responsible for our own financial well-being. That's the future of finance I envision, a future where humans and AI work together, each playing to their strengths, to navigate the complexities of the market and create a more equitable and prosperous future for all. I bet you didn't know how fast the world of AI and Bitcoin is evolving. What's true today might be outdated tomorrow. That's why it's more important than ever to stay informed, to educate yourself, to become fluent in the language of this technological revolution. Don't rely on hype, on rumors, on get-rich-quick schemes. Dig deeper, read beyond the headlines, seek out credible sources of information. Understand the technology, the risks, the potential rewards. The more you know, the better equipped you'll be to navigate this exciting, challenging, and potentially lucrative world. Knowledge is power, and in the age of AI, that power is more accessible than ever before. I bet you didn't know how AI can predict Bitcoin crashes. The world of AI and Bitcoin is full of mysteries, of possibilities, of opportunities waiting to be unlocked. And I'm here to help you navigate it all. So, hit that subscribe button, give this video a thumbs up, and ring that notification bell so you don't miss a single episode. Let's explore the future of finance together. One algorithm, one Bitcoin, one mind-blowing revelation at a time.